Coming up on the show today, South Africa halts rollout of Johnson & Johnson COVID-19 vaccine. Egypt demands $900 million compensation for Suez Canal blockage. And Africa Financial Corporation's total asset grew 20% in 2020. Hello and welcome to Business Incorporated, this midweek edition. I'm Ini John Mekwa. We'll start off with the markets, where sentiments in the markets we track here in Africa remain mixed. South Africa's JSE jumped by almost 1%, while Nigeria's main index ended the session yesterday negative. In Egypt, the EGX 30 shaved off 1.65%, while Kenya closed negative on Tuesday. And in the Middle East, investor sentiments in the Gulf region were mostly positive at intraday. In the UAE, the Abu Dhabi index added 0.33%, while Dubai's index rose 0.15%. Elsewhere, in the Qatari index posted the strongest gain of 1.19%. Only the market in Saudi Arabia was negative. European markets edge higher with earnings, data, and vaccines on the radar. Chelsea is standing by at Frankfurt Stock Exchange for more details. Hello, Chelsea. How are you doing today? Well, we'll start off with what seems like the hottest news now. Johnson & Johnson said it would delay the rollout of its COVID-19 vaccine in Europe amid reports of rare blood clots. First, it was AstraZeneca. Now this. What are investors doing or saying about this?
Well, this is obviously going to be a major setback for the European vaccination campaign. And just to say that rollout has already been really beset by a lot of issues since it began in January. The Johnson & Johnson shot was pretty crucial to the EU's vaccine plans. They were expected to receive about 55 million doses from Johnson & Johnson starting basically today. Today was when the rollout was expected to begin. And the real benefit of the Johnson & Johnson vaccine is that it only requires one shot, so that would have really ramped up the levels of vaccination here. So now the EU is sort of having to reassess what it's going to do. We already did hear from the head of the EU that they have negotiated for more doses from Pfizer and BioNTech. This is one of the vaccines that has been most given here in Europe and hasn't had the same issues with blood clots. So they are getting a bit of help from Pfizer and BioNTech, but it's clear that this is going to slow down the plans for vaccinating the population here in Europe. And for investors, that's a blow because, of course, vaccinations are the key to reopening the economy.
Wow. Well, cryptocurrency exchange Coinbase is going public today on the Nasdaq in the US. There's been a lot of buzz about this offering. What do we expect?
Well, this is going to be really a blockbuster debut. This is the first time a cryptocurrency exchange has gone public. And also, we're in this moment where there's so much euphoria over cryptocurrencies. Bitcoin rising above 60,000, just a ton of interest in the cryptocurrency space right now. And that's been really good for Coinbase, which is one of the most established exchanges out there for cryptocurrency trading. So they're expected to have a valuation between $70 and $100 billion when they go public today. That would actually make them more valuable than the owner of the New York Stock Exchange. But of course, investors are going to be looking at this very closely because Coinbase is very reliant now on particularly Bitcoin, and this remains a very, very volatile market. So Coinbase's revenues are also very volatile, and it's unclear how much interest there's going to be from investors for this very volatile stock. But it's certainly a landmark for the cryptocurrency space today.
All right, so there's new data out this morning on EU industrial production. What did it show?
Well, it showed a 1% decline in industrial production in the Eurozone in February. And this is starting to add to a trend of data that we're seeing out of here in Europe, where industrial production, industrial orders, everything coming from the industrial space actually seems to be slowing down. That's quite a big reversal from the trend we had been seeing through last year and into the beginning of this year, where the industrial side of the European economy had really been able to brush off lockdowns, coronavirus restrictions. It had remained very, very strong despite all of these coronavirus measures here in Europe. That does appear to be potentially changing. We'd seen, for example, data out from the German industrial sector showing a decline in production, a decline in orders. So this is raising concern that really what's been the backbone of the European economy, the industrial sector, factories, manufacturers, could be starting to finally bend and become weakened by the coronavirus measures we're seeing here in Europe.
All right, thank you so much, Chelsea, for bringing us up to speed on happenings in Europe, and enjoy the rest of your day. Well, we'll head over now to London to chew on the latest UK productivity report. And Juliana, as usual, is waiting for us. Hello, Juliana. Good afternoon. Well, the Office for National Statistics has released the UK productivity report for 2021, showing a slump in total output. What more does this report show?
Well, not much to see here, Innie, to be honest, but just besides the two figures showing that despite output falling by 10% during the year 2020, productivity rose slightly by 0.4%. As I was to say, economists say there's nothing much to see here. And that's because we know last year it was a pretty tumultuous year, not just for Britain, but for the entire world. But for Britain in particular, it had the highest death toll of COVID illnesses in Europe. And of course, our economy shrank by the most in almost 300 years. So even though it's a little bit disappointing, no movement on the markets.
Global stock market pushed to record highs today as bond yields after data showed U.S. inflation was not rising too fast. Are the markets in the UK also posting gains?
Okay, so we're talking about the FTSE All-Share today and the global markets. Well, there is lots of anxiety. I briefly heard you speaking in Frankfurt about Johnson & Johnson, which of course is getting everybody anxious, particularly those who are trading on Wall Street. We're expecting mixed reactions on their stock markets. But the FTSE is in positive territory at intraday, thanks to the oil majors, BP, Royal Dutch Shell. They're all trading up at intraday, and that's because there's been a push up in the price of Brent crude oil. But I've got to say, a big story from the FTSE today has got to be Tesco. Tesco is Britain's biggest supermarket. Their shares fell by about 4% at early trading. They were open during the entirety of 2020 because, of course, they are an essential retailer, so they were given the green light to stay open by the government. But in their trading update released earlier this year, they shocked everybody by showing that they had a fall in revenues. Their revenues sunk for the first time in several years, and this is despite the fact that their sales surged stupendously. Lots of bosses are saying this is due to COVID-relating costs and paying back government subsidy schemes for staff that were sick due to COVID. But yes, let's have a look at the numbers. The all-share is up 0.15%. The FTSE 100 is up by 0.13%, and the FTSE 250 is up by 0.07%. In the currencies market, the British pound also up on the US dollar by 0.09%, up on the euro by 0.01%, and the British pound is unchanged against the Japanese yen at intraday.
Well, away from figures now, the plan to pay the chief executive of Foxtons about £1 million in bonuses seems to be raising a lot of dust. What can you tell us about this?
Yeah, this is a massive story, pretty embarrassing. I'm sure the bosses at Foxton are going to have a lot of pinkness in their cheeks. Let's just say that. This is all about their chief executive officer, Nicholas Budden, who was hoping to get away with, as you said, £1 million worth of bonuses. This is accrued to the year 2020, but this comes at a time where the share price of Foxtons has fallen fallen dramatically from 94 pence per share to about 64p per share. So their market capitalisation has dived. And also as well, for several months, thousands of their staff were on furlough. They got business rates relief from the government up to millions upon millions of pounds. And now shareholders are not happy that bosses have decided to pay out this £1 million bonus. They haven't paid it out yet. They're still mulling over that. And we've actually got a response as well from two of the biggest shareholder advisors in the world, Institutional Shareholder Services and Glass Lewis. They've all condemned the plans to pay Budden this price. And it does come at a time where, you know, last year we had the Bank of England urging banks not to pay out dividends. Some of the big FTSE companies also decided not to do it. So they're wondering why Foxtons have decided to make a pretty controversial choice. But, you know, it's a long 24 hours, so who knows what this story will be like tomorrow.
Yes, yeah, you can say that's again very long, 24 hours. Well, thank you so much, Juliana, and enjoy the rest of your day. Well, we move over now to China, where shares led gains in Asia-Pacific during today's trade as Chinese tech stocks listed in the city jumped. By the market close in mainland China, the Shanghai Composite gained 0.6% to 3,416.72, while the Shenzhen Component advanced 1.55% to 13,728. Hong Kong's Hang Seng Index also saw robust gains as it climbed 1.42% to finish the day at 28,900.83. Shares of Chinese tech firms listed in Hong Kong saw a rebound after 12 companies signal compliance with antitrust laws. Elsewhere, the Nikkei 225 in Japan slipped 0.44% on the day to 29,620.99, while the Topix Index declined 0.33% to 1,952.18. South Korea's Kospi rose 0.42% to close at 3,182.38. Over in Australia, the S&P AS 200 climbed 0.66% to end its trading day at 7,023.10. MCSI's broadest index of Asia-Pacific shares notched about 1% higher. And on Wall Street, U.S. stock futures were flat in early morning trading ahead of the first batch of corporate earnings. Dow futures traded marginally lower, while S&P 500 futures and Nasdaq 100 futures both hovered in mildly positive territory. On Tuesday, the S&P 500 climbed 0.4% to close at a record high. Equities shrugged off the Food and Drug Administration's request for states to pause administering Johnson & Johnson's COVID-19 vaccine after 6 people in the U.S. developed a rare disorder involving blood clots. Moderna shares gained more than 7% on the news. The Dow Jones Industrial Average lost 68 points after dropping more than 150 points earlier in the session. Bank stocks have risen sharply so far this year. Now in the oil market, prices rose in early trade today, adding to overnight gains after industry data showed U.S. oil inventories declined more than expected and OPEC raised its outlook for oil demand. Brent crude futures rose 28 cents to $63.95 a barrel after climbing 39 cents yesterday. U.S. West Texas Intermediate crude futures similarly climbed 28 cents to $60.46 a barrel. The Organization of the Petroleum Exporting Countries, OPEC, tweaked up its forecast on Tuesday for world oil demand growth this year, now expecting demand to rise by 5.95 million barrels per day in 2021, and that's up by 70,000 barrels per day from its forecast last month. It's banking on the pandemic to subside and travel curbs to be eased. We'll take a short break now. When we come back, we head to South Africa. Welcome back to Business Incorporated. Well, yesterday we told you how the South African government plans to extend the COVID-19 loan scheme by 3 months. But there are questions like how effective has it been? We have Makwe Masilela, the Chief Investment Officer at Makwe Fund Managers. He joins us to talk about this. Hello, Makwe. Welcome to the show.
A pleasure. Good afternoon to you and to the listeners, to the viewers.
Yeah, thank you. So the South African government has extended 3 months away from the deadline of a loan scheme that is central to efforts to counter the economic impact of the COVID-19 pandemic. How is this news being perceived by South Africans?
For us, it's a non-event because the scheme itself, it hasn't done much. Because if you remember, it was almost a 200 billion kind of a guarantee, and only 18 billion thereof has been used. So even if they can extend it for another 3 years, whatever, maybe that's when there will be an impact. Remember, this is not money that the government has allocated and put aside. It's just a guarantee. So there are no cash or funds implication when it comes to the government for now. It's just only that they're just guaranteeing. So I don't even understand why they're only doing it for 3 months, because remember, most businesses, especially small businesses, not just in South Africa, but globally, these are the people who are able to drive employment. But these are the very same people, the small businesses, that struggle when it comes to access to capital, because when they go to the lending institutions, they're required to provide some collateral, stuff like that. So probably maybe the government should think about this and just leave it there, that listen, this will even be able going forward to help those small businesses that struggle to provide collateral whenever they go to these institutions looking for funding.
Okay, but is the issue about the duration, or are there some impediments, that stops people from accessing? Because out of 200 billion rand, like you said, only 18 billion rand has been accessed. Are there impediments to accessing it?
Yes, the requirements that people have to provide are just too much, and the banks, as they are, they don't even operate as if there is that guarantee. They operate as normal. They treat you as normal, as if things are normal when you go and try to have or ask for loan. So the problem here are the requirements. At some point, the government tried to relax some of them, but still it's not happening. So the whole scheme has to be reviewed, because for the first time in their lives as the lending institutions, banks having this kind of a guarantee coming from a big brother like government, so they should be more accommodative and listen more to those people trying to approach them.
All right. So let's talk a bit about the power situation. Eskom began stage 2 load shedding yesterday. Any idea how much impact the power situation has had on the economy and what the government is saying about it at this time?
You've got two impacts when it comes to load shedding. You've got the real economic impact that companies have to close, shops have to close, restaurants have to close because they don't have electricity. Then as a result, they lose some sales. And then you've got this other impact, which I think is the biggest one, that it affects investor confidence. Now, people who are supposed to come and invest in the country, who are looking into expanding current business, they become reluctant when they don't have guarantee of supply. And for me, I think that's the biggest economic impact, that people will never, or they will defer some of the investment decisions, whether companies which already exist in the country or new ones that are supposed to come. So it's not a good thing at all, because we've been having this issue for a long time. It's not an issue that we should be grappling with. Should be having some solutions as we're talking now, as it's kind of embarrassing that we are still talking about load shedding in South Africa today.
All right. Thank you so much, Mr. Masilela, for sharing your opinion with us. Well, Makwe Masilela is the Chief Investment Officer at Makwe Fund Managers. We're still staying in South Africa as the country has halted the rollout of Johnson & Johnson vaccine after health agencies in the United States recommended its suspension, citing concerns about rare and severe blood clotting side effects. South Africa will suspend its vaccine rollout until the Johnson & Johnson vaccine is sufficiently interrogated. The country's health minister, Zweli Mkhize, believes that the deliberations will take a few days, as South African scientists are confident that the FDA decision is only on a precautionary basis. 6 women between the ages of 18 and 48 were found to have the blood clotting side effects, according to the U.S. Centers for Disease Control and Prevention and Food and Drug Administration, out of more than 6.8 million doses of the vaccine, which have been administered as at the 12th of April. Meanwhile, the Coalition for Epidemic Preparedness Innovation, CEPI, and the African Union Commission have signed a memorandum of understanding which aims to strengthen ties between the organizations and the Africa CDC, a specialized institution of the African Union responsible for the prevention and control of diseases in Africa, to enhance vaccine R&D and manufacturing in Africa. This collaboration forms a major part of CEPI's longer-term epidemic and pandemic strategy, which was announced in March 2021. As part of this strategy, CEPI aims to work with low-income and middle-income countries to develop the infrastructure and expertise to undertake these clinical studies needed to advance vaccine development, support technology transfer, and develop national and regional manufacturing capacity that will enable the countries to take full ownership of their national health security. And Egypt is demanding $900 million in compensation after the blockage of the Suez Canal at the end of March. Meanwhile, the container ship that caused it has been seized. The head of the Suez Canal Authority, who confirmed this, says that negotiations are on with the Japanese company Shoei Kizan, owner of the ship, and insurance companies to obtain compensation for the damage suffered when Ever Given was stuck for about a week across the canal, crippling traffic on the crucial seaway. Traffic on the canal, which accounts for more than 10% of world trade, resumed on March 29th after the ship was refloated with the help of international experts. Africa Finance Corporation's audited financial statements for 2020 calendar year show strong and continued growth, with total assets reaching $7.36 billion on the 31st of December, compared with $6.12 billion a year earlier, indicating a 20% increase. Amidst a tough economic climate, asset growth was largely driven by a robust pipeline of infrastructure opportunities, maturing project development initiatives, and repeat business from clients seeking to capitalize on the opportunities from the disruption in the global supply chain to embark on import substitution projects and value accretive beneficiation of African resources. The president and CEO of AFC, Samaila Zubairu, says that achieving this financial performance during an unprecedented time of a global pandemic is testament to the corporation's resilience, driven by a strong team of agile professionals, as well as the corporation's vital role in Africa's infrastructure and industrial development. And that's it for the program today. Thank you so much for watching. I'm Ini John Mekwa.